Palantir is up, what, 170% year to date, trading roughly around 250 times. A great company, great technology, but these tech stocks are valued at growth in perpetuity, that there's never going to be a hiccup. So for somebody to come along and throw a little cold water on it, I'm surprised more people are not doing it. But there's an old adage, you can go broke shorting a momentous market. So I'm not so sure how long this lasts.
Although I guess with puts, you're not putting quite as much as risk as if you're outright shorting a max. But so for normal investors who are looking at this question, what do they do about it? In other words, like if you hold tech stocks, do you just keep holding them? Is it just a question of not adding at these levels?
It's a great question. You know, we have an investment in a lot of these large cap dividend tech stocks, and they've grown very large. So we are scaling them back a little bit for a variety of reasons. One being the valuations, and we just don't want to be so concentrated in the tech market because people forget back in March and April this year, the NASDAQ was down 20%. So the market could take this momentum and shift to the negative, and people could get really hurt. So we wouldn't be piling into these investments. And depending on your tax situation, we would lighten up a little bit here. We definitely would take a little profit. I mean, again, we're not saying get out of them, but you got to manage the downside risk. The valuations here at 40, 50, 200 times. How much more do you expect to happen? And is it asymmetrical? I think there's more downside than upside in the near term, but the momentum is crazy right now.
Yeah, it does feel that way. And we've been talking to a lot of investors as well about diversification. And that means something a little bit different to everyone. And I think in your case, it means something a little bit different too. I'm curious about your strategy around sort of what you view as stocks that'll benefit as interest rates come down more.
I liked your point about people trading down at all income levels, because I think you're seeing that as well.
What about the government shutdown? Are you getting a lot of questions about that from your clients?
We do. We get questions, and often questions, a lot of it, and from our advisors as well, around the lack of government data. Like, how does the Fed make a decision? You know, how do people even know how to manage rates in the economy in the absence of data?
And what do you tell them?
You know, we look at the alternative data sources. We'll get ADP. I think tomorrow morning. The last ADP report was weaker. The Fed has called out a number of the state jobless claims have been stronger. But one thing that we've looked at going forward is the Challenger Gray and Christmas report about future hiring plans that will come out on Thursday. Normally by now you'd have 600,000 announced hires, typically among retail for the holiday hiring season. It was 115,000 through September. We'll see. And two of the biggest firms for hiring are Target at 100,000 last year and UPS at 125. Both of those are firms that have announced layoffs.
And so let me ask you this final question. You look at that data, right? Those metrics. What do you do with that as an investor with that information?
It's one of the reasons why I think the Fed should cut. I would be looking to potentially lengthen duration if you were concerned that the Fed was behind the curve and we might see some economic slowing.
Concerns, of course, have been weighing on these Palantir shares, despite the company topping third quarter estimates and raising its full year guidance. Joining me now is Gil Luria, D.A. Davidson, head of technology research. And obviously, Gil, there are two things going on here. There is the fundamental story of the company, and then there's the stock story of the company. On a fundamental basis, in these numbers, was there anything not to like?
No, the results were spectacular. They exceeded any expectations anybody could have. This is a company that's more than a $4 billion run rate, growing 63%. It's more than doubling its commercial business. And these aren't little deals. They have some customers that spend as much as 9 figures on Palantir software. So companies are lining up to use Palantir in order to achieve their AI goals. The government business grew 50%. The government's still leaning more and more on Palantir to achieve its own mission critical goals. The stock is down today. That has nothing to do with the fundamentals from last night.
Okay, so what does it have to do then? Is it just a valuation question, and this was sort of a sell the news kind of situation?
I think it was something like Uber shares were up a bunch this year. There was a bit of a sell-off today with tech, as we're talking about, and maybe there was a couple little areas where it was going to be difficult. It was a difficult setup for it to kind of outperform today, I think.